And you did mention earlier on inflation being your key concern here, and the BSP has been the one doing all the heavy lifting, recently tightening as well. I mean, what more can be done from the fiscal side to battle this inflation, especially since it's supply side driven?
This is a tough situation because the supply side driven inflation is kind of a new situation that we're not used to dealing with. I do think that the BSP will continue to raise interest rates. It's about the only tool that it has in its quiver, if you will, to fight inflation, and they'll likely continue raising the policy interest rate through the course of the year. In terms of fiscal policy, I mentioned that a big component, aside from the imported inflation through high energy prices and then high transport prices and fuel and such, the other side of inflation is food. Some of that is imported through higher edible oil prices and higher wheat prices. But I think anything the government can do to ensure that food production and the distribution of food around the country is managed without any interruption, and longer term, making sure the safety of the food supply is guaranteed, so that there aren't any shortages, say in terms of pork, that have been experienced in the past.
Steve, how much do you see the BSP raising rates here for the rest of the year, and even up to 2023?
I think it's not. I don't think it's difficult to see that the BSP might raise rates by 25 basis points, maybe 3 times, maybe 4 times by the end of the year. I think a policy rate of 3% or maybe something slightly above 3% is fairly reasonable to expect by the end of 2022.